Ladies and gentlemen, as you've just heard, it's now time for the Q&A session in which you can ask your questions. And yes, indeed, we already do have a number of good questions, great questions in fact, but you can still ask some more. And it's my pleasure to introduce the moderator of this Q&A session, who truly needs no introduction, as an SFF ambassador and CFTE co-founder, Hugh Ewan Thiel.
Thank you very much. And we do have a lot of questions and we don't have much time. So I will ask the questions that you sent. And if I can ask the senior lecturers and experts to answer quite quickly in a short and concise way. And for the first question, that would be for Kim. We heard about all the impressive developments of payments. But what about regulators? So can regulators regulate those payment companies before they risk the financial stability? In other words, are regulators prepared for this boom in payment, and how can they handle them?
Oh, it's a great question. So, a lot of regulators obviously are different, and around the globe, different regulatory agencies have different amount of resources, which can sometimes, help if they have lots of staff to be able to track some of these innovations and these new emerging companies. But I think it's important to remember that most regulators are united in several goals. One is that they very much care about consumer protection, and also that they very much care about promoting competition. And so I think when those tenets are guiding the regulatory agencies, they then can look across the payments sector, in whichever region they are in, and they can look at some of the risks that are posed by each company, and they can prioritize their resources accordingly. So I don't think for regulatory agencies, it's a matter of regulating every single company, but again, it's looking at consumer protection, competition, and the risks posed, and then they can allocate their resources accordingly.
Thanks a lot, Kim. And a question for Michael. Invisible ambient payments, would it be discomforting for users, basically, where money just goes out of their account, and for providers where they lose their perceived value? Is it the future?
Right, invisible payments, I think everyone's kind of moving towards this. You'll often hear the Uber experience where people get into a car and then just simply step out and the payment has already happened. That's the invisible payment, this uninterrupted payments experience. So in particular, can we have a dramatic impact on any type of service adoption and, drive never seen before in sales? So this is something that we're really looking at. I think it's a tricky one. With so much money being spent on branding, being out of sight and out of mind creates a degree of unrest around the current providers. And it's potentially sets, not to sound too pessimistic, but it does potentially set up the perfect playground for bad actors maybe to take advantage of the lack of these providers being front of house and there being a lack of a trust mark of sorts. But, it will inevitably result in a seamless experience, putting payments to the back of the mind and making it all about the experience of the service or indeed the product that you've just acquired.
Thanks a lot, Michael. We have a question about innovators. So we see a lot of e-commerce companies being quite innovative. What about traditional manufacturing and trading companies, which tend to work mainly with traditional banks? Do you see them being innovative? Fred, perhaps?
Yeah, that's a good observation. Manufacturing and large trading companies, typically, they're not so much in a context where they're faced with impulse buyers. These are more planned, long, just-in-time type of logistical change that need to be supported by payments. So the traditional payments typically can serve them for a longer time, I guess. I think that will come. You already see the SME market moving in that direction, more instant payments, more flexible ways of payment, more card payments. But maybe it'll take another couple of years before it really reaches the big manufacturing and trading areas.
Thanks a lot, Fred. I think there's a question for you, Ritesh, and that's really about business models. So do you think that bank payments, and mainly thanks to open banking, has a future compared to card transactions?
Yes, definitely. Because when you look into with the innovation in the payment, the value stream in the payment is quite strengthened, as well as there are multiple players. So when we look into the card transaction, that takes several days to settle and incur significant amount of fee from each intermediary as well. So, and that eats away the merchant's profitability. And account-to-account payments by the open banking have significantly lower prices and the per transaction cost than the card payments. So yes, it is definitely going to disrupt the credit card and credit card network or the card network as an overall. If we just look into one of the example for that matter, uh, early this year, there was around 1.5 billion transaction in a month, which is amounted around 60 billion worth of transaction. And the 1% of it is around 575 or around 60 or 600 million or so. And that's been given to the credit card companies. So when you look into the overall size, it's massive, and it is putting a pressure on the merchants and indirectly onto the consumers as well. So yes, the open banking is going to disrupt this marketplace.
Thanks a lot, Ritesh. And there's a question which is, I think, a very good follow-up, which is, on the other hand, credit card schemes, for example, have strong consumer protection. What about new digital payments? Are they matching those level of protections? And perhaps, Kim, if you'd like to answer this.
Sure. Yeah. So I think as we think about what the card schemes have done really well over the years is that they've provided a consistent user experience. So consumers, understand the what's going to happen in the transaction. They understand that they're protected. And I think there's a level of transparency that they have as well. And so I think, for new digital companies, certainly, if they don't protect consumers, they probably won't last long in the marketplace. So there is that aspect of, almost market pressure, if you will. But I also think that the way that new companies protect data and secure data and the way that they can be transparent about how they're using a person's data, I think those could actually end up being competitive differentiators for companies. And so again, I think it's in many digital companies' best interest to make sure they've put consumer protection at the top of the list and that they're also transparent about their processes and practices that support that.
Thanks a lot, Kim. And also related to that, and perhaps for Michael, I think a quite interesting point a lot of people can relate to. Someone said, my personal experience is that people use services provided by Revolut quite frequently, but not really for large transactions or savings. Do you think that that will change in the future?
That's a great question. I think trust in fintech is a hot topic that's just not going to go away right now. But will this change? I think, Starling Bank just reported a profit. So from a business model point of view, I've been quite critical over the business models of neobanks, if we want to throw them into the basket of fintech. But banks, essentially, traditional banking and the business model, they survive and thrive by lending money and through deposits. And they're the custodians of value and trust. They protect our identities. They protect our hard-earned cash. Now, if you're willing to hand that over to a company that's backed by VC funds and might not be here next year, not all of them are like that, but this is the blanket, labeling of fintech or indeed the neobanks. That's on you. And everyone and every generation has a different risk profile. And as you get more responsibility, maybe you'll look beyond the GUI or the user experience that's maybe jumping off the page at you. So neobank versus fintech, I think they're in the same basket. And I think at the moment, people are leaning towards better the devil you know, as in the brick and mortar of the old bank. That's where we're at today in this time of crisis, but the great user experience, it just lacks these deposits and the lending power. The one thing that I'll just finish with.
Thanks a lot, Michael. Can I just interrupt you because we're running out of time? And I'd like to finish with two questions on a very important topic, which is financial inclusion and emerging markets. And perhaps for you, Fred, how many categories of countries would you say in terms of speed of payment evolution? Is it a 2-speed, 3-speed? Is payment evolution leading to more inequalities?
Oh, that's really a very profound question, and I think it's actually following that the speed is not so much the speed of a country, but it's the speed of the various sectors in the country. So there is the, let's say, traditional banking sector, which is in some state everywhere, more or less advanced. And there is the way in which especially the digitization of payment initiation via mobiles is entering into that space. So there are countries where they're making like enormous leapfrogs into modernity in a big way, just by changing the front end, by putting simple accounts and simple payment initiations in everybody's hands, because they all have phones. And I mean, the Kenya example of M-Pesa is a prime example of that, already dating 10 years back, but still that kind of jump. And then the other one is where the governments and the monetary authorities take the lead, and the banking sector takes the lead to modernize the back end, to put instant payments in place. There we have examples of around 60, 70 around the world, so another 150 countries to go. And I think that speed is happening, and that financial inclusion is much more an overall concern, which is definitely helped and brought forward by the low threshold of having a mobile and having an app on it. Whether it's actually increasing inequality, I would hope it's not. I think it's the inequality is more in other economic pressures, tensions, inequalities of negotiating power and things like that. Not so much whether you have a payment.
Yeah, perhaps I have your view on that also, Ritesh. So what do you think? Digitalization of payments really, helping financial inclusion or not?
It is definitely helping financial inclusion. And when we think about the financial inclusion, there are two aspects. One is the underbanked and unbanked. Generally, people think about the unbanked population, but there's a huge population which is underbanked as well. And I would say as much as 60% population of the world, which is underbanked, and 1.5 billion is unbanked. So yes, the new technology is definitely helping, and even we are coming up with our own product to help underbanked population. So the technology, when we talk about like the biometrics, which are making a significant improvement into the financial inclusion globally, because the fundamental challenge with the unbanked population is about identifying them, who they are, and settling their identity. So whether it's through the utility payments or through the mobile payments or whichever way, and the biometrics is the unique identity. So that is definitely making a significant difference, and the digital payments on top of that. Various example, we talk about India for that matter, it's a UID. We talk about Indonesia, Vietnam, Africa, everywhere. So yes, it is definitely making a huge difference.
Thanks a lot. And I think that's a great way to finish this panel and also this session in terms of the impact of payments on society. So I would like to finish by saying thank you, of course, to our senior lecturers and to our experts. Thank you for your time. Thank you to all the partners of today's event. And on behalf of CFTE and BIB, thank you to the audience. And I hope that in this new world of payment, we're going to all be able to make an impact. Thank you very much.
Thank you.